Good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to the Making Money Trading Stocks and ETFs webinar that we do every Friday, or most Fridays at least, as long as there's a market trading day, unless I'm traveling. So I just wanted to get started. I don't know if Michael's joining us tonight or either of the Mikes. Talked to Mike Traeger earlier this morning. I want to remind everybody that all the materials we present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's a little bit about what I've done. Hey, I'm really pleased. I get out in the afternoon, and here's a picture. This sweatshirt, this t-shirt that I have on is just totally soaking wet, but I've got myself up to about 3 miles, which is about a 5K rate, about 40 minutes to do this time period. So I would like to have it more down towards 30 minutes, about 10 minutes a mile. But hey, for somebody as old as I am, that's pretty darn good. I'm really enjoying it. Back here in the background, you can see the Pacific Ocean and some of the neighborhoods we run through, because I want to stay in really good shape so I can keep doing this for as long as I possibly do it. Yeah, David, my knees are holding up fine. I've had 3 knee surgeries on one leg, so I figure how much, what's the worst thing that can happen? And I do take a lot of glucosamine chondroitin type of things for my knees, and it's great. Take no pain medications whatsoever, and of course I go at a nice gentle pace. Hey, I've been reading a lot about Jesse Livermore lately, and one of the things that he said that just really caught my attention: buy right, sit tight. He made the statement one time. He said that he made the majority of his money by just sitting. In other words, waiting for the proper time, and then just hanging on once he got into position. And I think in our modern era of trading, sometimes that's difficult and challenging to do, simply because it is so easy to jump in and jump out. Remember what would happen back in Livermore's time frame. A lot of times he didn't get stock quotes the same day as the market. They would sometimes come 2 and 3 days later via telegraph. He did not get any, confirmation notices, instantaneous. Sometimes they would be 2 weeks before he got his before he'd put in an order to buy via telegraph, and he may get his confirmation back in a couple of weeks. Very interesting. Certainly different than what we have going on now these days. So, hey, we're going to, the objective of today's session is basically to spend about 10-15 minutes together, timely actionable intel review at the end of the week over what we covered on the Monday webinar, that after market Mondays, which is these two go together. So I hope you can join in on this, and they're for both premium active trend trading members and anyone else who wants to join. We'll cover market review, stocks, ETFs, setting up and outcomes, and what else. Today I'm going to talk a little bit about what else, about something that I've been looking at doing, and I'm going to call it the Catfish Special. Or Bottom Feeder's Delight. I'm going to identify one stock. I'm going to try to do it per week or every other week. Identify a stock that is has been on the IBD 50 during the year, or is currently on the IBD or on the running list that I keep track of for the IBD 50. So we know that it's got pretty good fundamental bones, but it has fallen into disfavor, and there are certain points, and I'll show you on the chart here, where we want to be paying attention. And I've got a Catfish Special, or a Bottom Feeder's Delight, to share with you today. So here's where we're sitting. We're up about a little bit over 30% on the active trend trading system. Dow's up. Everything's up. Looking into the end of the, to the first part of the year, and we'll be looking for one. I want to really be concentrating on both the Russell and the NASDAQ going into the end of the year, because they're the ones that tend to move most when we get into the end of the year squeeze higher. So let's take a real quick look at some stocks. Here's this S&P. What's going on with the S&P? Well, one, we had the just explosive move up here, right up into, and this was as of the 1st, which was last Friday, right into resistance at the previous highs. And then it reverses downward on Tuesday because of the geopolitical issues over in North Korea. Big sell-off down to the 50, bounce. Now we're just driving sideways with these little spinning top dojis. And it appears as if it could go either way. One, it's going to want to either break and move back up. Where's it likely to go to? Back up into the 2480 level, or break down from here, break below the 8-day moving average. And if we get a close below the 8, below the 20, then we can anticipate we're going to at least take out the 50 and probably go back into the support level of the downtrending line and or the 2440 level. So that would basically shoot that down. On a weekly chart, one of the things I want to take a look at is this move that started last week and is finishing today for this week. It basically is just a little, TSI squeeze, which oftentimes leads to just further downside. Again, we're really interested in TSI on the S&P when it gets down to the negative 25 area, because that's when the stronger rebounds tend to happen. So that's what we're looking at with S&P. Let's take a look at NASDAQ real quick. NASDAQ, similar type situation, a little bit, I won't say a better sell-off, but a nice move down today. We have a TSI turning over and breaking down below the 8, below this past breakout level, the 59.28 level. And so we may get a retest back down here around the 50. Every time when something is going into a topping type of process, what will happen is you'll get several attempts where an initial run up, it'll fling itself up, never hardly come close to the 50-day moving average. Then it starts banging on the 50-day moving average, and every time it bangs on it, it's like a jackhammer that hammers it over until eventually the 50-day moving average will slant over, and then it'll just slide off of the 50 as it falls to new lows. We'll see if this results in another hammering of the 50 if we in fact turn over from here. On the True Strength Index weekly version, yes, it looks as if we want to turn over. We are getting a kind of a 2-line, almost a 3-line cluster up here. And we're getting you could call this a bearish harami, although it's not reversing much of an uptrend. So I would stay away from that, calling it that on a, but it's definitely a inside week, which tends to be after an up, when you're moving an uptrend, any type of inside week can tend to say, hey, we're going to go down over the next little bit. And we'll just keep an eye on this. You've got this channel. We can actually remove this channel, but this breakout line, that's a level of support also. But I'll just remove that. So TSI there. And then you've got this little trend line going up here that we can draw in, and so that brings in another level of support, and that's kind of tracking along the 50-day moving average. Keep an eye on that. So Russell, I like Russell long term. Why do we want to be in? So Russell's doing kind of an interesting little thing within the confines of the Fibonacci's from here to here, and also from here to here. It's been in a pullback. This little box is just defined as support / resistance box, and it's holding right there at the 100-day moving average. And we're getting a nice spinning top. TSI looks like it wants to roll over. Momentum has already rolled over. Longer term market forecast, its intermediate momentum is rolled over. So not a lot of huge buying kicking in. Again, on the weekly chart, still, looking kind of negative. If the weekly chart closes below this level, or breaks down next week's 1391 level, that's telling us that we're probably going to go back down here and test at the 1350 or this moving average, which is the 40-week moving average, which equates to to approximately the 200-day moving average, so which we have right there. So let's see what else. That's about all we're looking at this particular point. Again, this looks like it's doing a little bit of a squeeze, could roll back over. Longer term, when is the really strong reversal points on the NASDAQ? Well, it's when the TSI gets down here somewhere around, let's say a negative 48 to negative 50. It also has a level of prior support at about a negative 20, where it tends to bounce from. And so we just kind of pressed it down to that point. Now it's popping up a little bit. We'll see if, as we see, and here's just a pattern, just be aware of, as we saw last in 2015, you get this move up to the zero line at TSI, hits resistance. Same thing. We'd already started a downtrend in the Russell, and sure enough, it gets up to that level. And I'm trying to get this to go. There we go. Up to that level, rolls over, and then really heads to the downside. Then it hits its secondary low, which this was in February of 2016, and then we've gone on to a really significant rally since 2016. But this is what we're waiting for. Homework, if anybody wants to take it on over the weekend, is look at TSI, go long, do the weeklies, and identify the strong reversal points and what level they reverse from, both on the indexes and also on individual stocks for off of the TSI. It'll really be interesting to you. So that's where I'm sitting. It's I'm remembering that September, historically weakest month of the year, which leads us to our setup points for October, which tends to lead us into the year-end move up. So really, really excellent information. So really quickly, we covered a couple of deals. You ready for your catfish special or your bottom feeder's delight? And this is going to be a new, I'm going to introduce this. I'm going to provide this particular entity, stock entity, to everybody, both the free members and the premium members. Please let people know that we're doing this on this webinar, and I'll explain to you why we're doing it. So, and here it is, without any further ado. We'll take a look at this on a weekly and a daily standpoint. And it is Kiwi. Not Kiwi 4, but Kiwi. And you're sitting there going, okay, what was going on with Kiwi? Well, Kiwi is very interesting. One, it was on the IBD 50 list all the way up and through about June. And then it fell into hard times. And you take a look at this on a longer term chart. Look at that, man. Talk about a pretty pullback down into support. Now, I'm not necessarily ready to buy it here. I would much rather buy it in the midsection of this big candle, and I'll check the volume. But what are the things that interest me in this entity? Well, one is, as we said, it is pulling back down into a level of support at 16. That didn't look very nice. Here, let me do this one at 16. So there's one, and we're getting a good reversal off that over the last 2 weeks. Two, look at that TSI down around a negative 50. What has it done in the past? We want to be aware of that. So when it tends to get around the negative 50 level in the past, it has gone on and bounced and provided a tradable rally in each one of these. Now, when I say a tradable rally, what does that mean? Well, back here in February 2016, it went on. Let's go here. it went on, it went on a run of about 50, 60%. So to me, that provides an opportunity for a tradable rally. Then it provides another one here, which was positive divergence, and it goes on for a little 40% rally. And then back here where it did this before, it goes on this run here. So that's about 124%. So are those tradable rallies? I believe so. What sets them up? Well, what sets them up is the weekly oversold condition of the TSI being down where it's found support and rebounded before. So as I said, it is at that level. We've got the daily TSI, daily indicators also in the in gear or in sync with the longer term. So as I said, I'm not necessarily going to buy right this moment. I would like to see this pull back into the midsection of this candle. So $17 or so, I'll pull back to $17 and then a reversal. Where's my stop? Immediately after 1580, I'd give it down to 1560 would be my stop loss. So again, this one is our catfish special or our bottom feeders delight for this week. I hope you enjoy this new feature. Another way to potentially trade this is if it pulls back to 17. One of the ways I am going to trade it, and I'll pop this up really quick so you'll be aware. Pull this over, trade, Kiwi. I will go out here to, I'll look at November time frame. It doesn't have a lot of liquidity in its options, but at that point, if I pull back here to $17 straight up, this 1750 call will be worth about $1.25 to $1.30. So I will say, I'm going to go ahead and buy some of that, and it'll automatically trigger for me. Does that make sense? So that's one way to trade it. And then I'll just hold on because I can buy like 5 contracts of that covering 500 shares. It's going to cost at $1.25. It's going to cost you about $750. I'll risk half of that on the assumption that it's going to get a bounce here and really rocket ship out. And if it gets back up to the 25 level, we will probably make about 3 times the value. Let me roll that up. And again, what I do is not necessarily all about trading, options, but I would like people to know how to do it. So if we got up to 25, that would be what? Let's say $7. It would, from where it's at, $7. And let's say it took till the end of September to do that. Well, if it did that, that 1750 call is going to be worth $7. And so I can just, put in there where if it gets up there to $24 to exit at about $7. So that's a pretty good, invest $1.30 and then sell it for $7. Again, I do not have to go in with a huge amount. I can go in with 2 contracts, but that's one approach on that. So just wanted to share that. That's our bottom feeders delight for this week. If you like this feature, please let me know. Send me an email, and we'll keep it up. Let's see. So here's the other items I'm looking at. Of course, I'm looking at IWM, QQQ, and the spiders. Will September weakness lead to the bounce we're looking to in October? We shall see. Gold, I'm watching Nugget, GDX. Need a really good pullback to jump into gold. Then, of course, I like my 3 stocks that I primarily focus on, which is Netflix, Tesla, and NVDA. I'm also right now looking at my floater stocks are YYCRUS and LGIH. LABU, again, is the 3-time leverage IB biotech. And then, of course, our catfish special being Kiwi. Here's where we sit as of, strategy 3 again continues to do well. I'm going to be focusing the rest of the year because it's gone so well. I will continue to trade strategy 3, but I'm really going to be focusing on hitting our entry points on strategy 1 to get it up to a higher level. I would like to see strategy 1 hit 20% for the year. That's the portfolio building. And then strategy 2, we will continue to and when appropriate, buy and sell options in that and do some straddles. So overall, I'm pleased with where we're at sitting so far. I'm watching. Another thing that I'm doing is I've just finished some backtesting and research on seasonality with the indexes. For the premium members, we're going to have some really good training, and also you're going to have a window of time where you can look every year to say, here's where I need to be focusing on the indexes, because these 2 windows per year is the best time to jump into the trades. And so premium members, I know you're gonna just really enjoy this. So here's where we sit as of today, approximately today. The pink line is just a regular S&P seasonality. Again, what we're looking for is to kind of continue to weaken into the midsection of October. And what we've found, and I'll just, part of the things that we are finding is that there is a bracket of time, and it runs from about mid-September to all the way into about mid-November, where in this bracket of time is when we found that the S&P turns around, will bounce like it's showing here. Now this 459-year average here is just basically, it shows that you get a strong reversal last week in October. But when it works its way out on the ground, that actually reversal happens in this area here. And the majority of reversals happen in reality is like in that area there. So, we'll be watching that midsection of October. I hope that information helps you. If you, again, are not a premium member and you would like to get more of that kind of information and the training to go along with that, please send me an email and let me know you want to become a member, and we'll get you situated and hooked up with that. So the reality of trend trading: 1, identify the trend, define the area of interest of value, define the triggers and the strategies, and that's what we do. I follow the 5 principles or 5 pillars of active trend trading. With active trend trading, 1 is we define what we're going to trade: top quality IBD growth stocks and our top-notch ETFs. We define when to enter, when to exit, what strategy we're going to use, and then what to expect. Here's a new feature that we just identified. This was from last week, so this information is no longer valid, but I just want to show everybody what we're providing now. For premium members, I'll be providing this on a private page on the website, where you can find this. And also, I'm going to put on the website for premium members your links to the webinars that we do just for premium members every week, so that, 1, you don't have to be dependent upon getting the email. You can go to that website or that page at the website every week and find both this. And what does this tell us? 1, it tells us, is the entity that we're following in a setup? And last week we had 3. XLF did not provide us what we were looking for. Oil also, but is it in a setup? And it doesn't necessarily mean we're going to get in. And then the premium members, if the setup turns out, then I send out the text alerts and alerts to buy into one of these entities. So I got a lot of good comments back on this. And the other thing that this helps with is if you are following the active trend trading rules, you can just take this list and then take the things that are highlighted in green and shape your own trade around those, which is really good. So basically, okay, that kind of covers it up for this week. Again, I am looking for weakness going into through the month of September, as is evident with, I will show this up really close, of things that are kind of falling apart on us. Tesla, perhaps. TSLA, Tesla. Tesla is finally breaking down, kind of has one level of support here due to that line, 340, and then down to 330, and this uptrend line there. So if this breaks here, then we're probably going to go visit this trend line there. And so so that's breaking down nicely. The other thing we have, and what it's doing is getting us set up for to trade it later on in the year. And of course, we trade Tesla on a weekly basis anyway. And then NVDA, again, it was kind of falling down this morning also. Is it going to, it's holding up well, but then it's still got this weakness showing up. This is a negative divergence here. So, hey, let's stand by. We could get a significant corrective pullback on NVDA. And then last but not least, Netflix. Did I do that right? We'll see. We did. Okay. Netflix, in a nice uptrend. It bounced up out of here, but it's reached a level of resistance zone and appears to be rolling back over. What would we consider this? One, it pierced the 50. Now we bounced back up to the top. If we break back down through the 820, that could and make this lower high. That could put us into a more significant correction and get us ready for, correction back down to 165 or even back to the 148 level. Could set us up going into the end of the year. And I got two, UCO. What's my thoughts on UCO? Okay, on UCO, I'd be looking at USO, Sean. And, basically it's got this little pullback going on here. Pay attention to the weeklies and the dailies. And we've got this, it's got support there. And it also has support coming in from over here. So we know we have support around that level. And I didn't do it. And, somewhere about 930. And so some kind of a rebound there. Just watch your TSI. Preferable place to pick up the TSI on oil is down here around the negative 50 level, somewhere between negative 50. It has gone lower than that because it's a very volatile entity. One of the biggest drops was here when it dropped down to 87, but then it went on from that and then put in a nice little move of about 38%. So that's just on oil itself. Roll it over to UCO, and it's a little bit different picture because of the backwardation. But again, when the TSI gets down in the negative 50 level, it tends to rebound nicely. It's done that a couple of times. And again, a tradable rebound. There's a 30% gain there. Here we have positive divergence. Went on for a real quick, I think we picked up on one of those, about 39%. So we just want to watch and see, how far is it going to pull back because we're down on moving averages, and is it going to, run up from there? So, it's a weekly chart. That's a weekly chart. So, okay, excellent. Okay, guys, thanks for joining us. Again, if let me know if you like the Bottom Feeders Delight. And I'm going to be tracking those on a weekly basis to say, okay, here's, so that by the end of the year, we'll have a whole list of them to see how they have done. Because if the TSI on a weekly chart is oversold and reversing, that can be a great long-term opportunity to buy into an entity and then ride it for a larger gain. Anyway, see you guys later. God bless everybody. Have a great weekend.